Gold under pressure here this Wednesday as the Dow hits 20,000. Joining me today is Peter Hug, Global Trading Director for Kitco Metals. Pete, welcome back.
It's nice to be here, Daniela.
So should we be prepared for this rally in the equity market to continue to pressure gold and support the dollar, Peter? How do you see it?
Well, I think what will happen overnight is that every single newspaper in the United States, well, probably globally, will post the story on their front page of their business section that the Dow hit 20,000. The question then is whether or not, you have volume that follows the story and retail investors get back into the market. Again, I think it's premature to assume that will happen. But the euphoria in the equity markets, not only in the United States, the TSX in Canada's hit an all-time high today. European stock markets are rallying. But more than that, you're also seeing interest rates start to creep up in Europe and in Canada and in some of the sort of the BRIC countries. So you're getting this sense of euphoria that everything is going to be wonderful and the economies globally are going to start to accelerate. And, in that euphoric type of atmosphere, capital is flowing into the equity markets, and gold is basically being shunned to a certain extent because they feel that the need for gold as a protective asset for their portfolios maybe is not as necessary anymore.
Pete, are you suggesting then it's a misplaced euphoria?
I'm not convinced I'm not convinced that we are at the turning point here and everything is going to be better. I mean, there are some real structural issues in the U.S. There are, a number of proposals that Trump has put forward that sound really good, but really the proof is in the pudding. And a lot of this infrastructure spending and possibly tax relief, these are all things that won't really work their way into the economy until well into 2017, if not 2018, and that's assuming they all get passed. We do have some headwinds coming up with elections in Germany and in France in March. So, there are a number of things in front of us that could derail this euphoria.
Right.
But it's, these markets, especially precious metals markets, trade many times from a perspective of perception, not necessarily reality. And, if the perception in the markets are that the U.S. economy is going to turn and get much stronger and the dollar is going to get much stronger, I mean, that basically from a fund manager's perspective, it creates a situation where they do not want to be heavily invested in the metals. And I think you're seeing some of that weakness now.
And let me ask you, everyone's so focused on the Dow hitting 20,000, but wouldn't it be more significant if the S&P hits 2,300? Is that the number we should be eyeing?
Well, yeah, I mean, I think the S&P is more reflective of the broader economy. I mean, the Dow, you get a move in some of the big bank stocks, and, that could add 50, 100 points to the Dow very quickly with a $3 or $4 pop in a JP Morgan, things like that. Right. So, I think the S&P is more broadly representative of the U.S. economy. I think the markets are ahead of us, ahead of ourselves. But again, these markets, when you're optimistic, they could run considerably further before reality sets in, and then the companies have to back it up with earnings. And, we've just come through the earnings season, so there's not a lot in front of us that could hurt this equity rally, especially if the retail public gets involved.
We have options expiries tomorrow, Thursday. Could this keep gold trading around 1,200, help it out here?
Yeah, I think there's a lot on the table at the $1,200 strike. So I wouldn't be surprised if the boys, so to speak, tried to keep it around or close to the $1,200 level and create some excitement tomorrow at options expiry. After that, I think gold will really be looking at taking its lead from where the dollar is going relative to the euro and the yen, and also whether or not the equity market can continue to rally.
All right, boys and girls, Peter. So just to wrap, key level you're eyeing for gold. I know you said the 1197 level now becomes a support line with 1208.
Yeah, 97 washed out pretty quickly this morning, held a more significant support line at 92. I would like to see gold close above the 97 to maintain some at least technical integrity coming into the options market tomorrow. If by chance we lose 92 today, I think the 1200 options expiry will become a moot point. But I do expect gold to hold sort of the 92, 97 level, possibly even get back over 1200 by the close of today, and then let the options expiries tomorrow dictate which way the market's going to pop.
Good thoughts, Pete. Thank you so much.
You're welcome.
And thank you for watching. We'll be back tomorrow with a new Kitco Gold Report.